And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast, Wednesday, March the 9th. I'm John Hoagland. Thanks for trusting me with your time. We're going to add another name or word to our list of things that we focus on here at the Market Forecast. We focus on context, always looking for accurate context, always thinking about risk management, always remaining patient, and working on our ability to adapt. And that may be a very important word for us today, as there is change in the wind. As far as economic numbers are concerned, nothing too impactful until the EIA petroleum report comes out at 9:30. But just before that, at 9 o'clock a.m. Central Time, the job openings and labor turnover survey comes out. But our prayers may be answered. Doesn't mean we can stop praying, but there are signs of diplomacy and compromise appearing from both sides in Russia and Ukraine governments. Russia has stated they have no intention of occupying or overthrowing the Ukrainian government. That's a big change. And Ukraine President Zelensky has cooled on the idea of joining NATO. So a little bit of hope, and it's definitely changing our markets. Of course, the most important thing is that this compromise and this hostility ends. I think there's still some considerable things to think about as far as war crimes are concerned, but let's get this hostility over with and try and get all these lives back together. It has been a horrible, horrible period of time. Doesn't seem like it should be happening here in 2022, but unfortunately, it is. So keep on praying. Even my coffee cup is happy this morning because there's hope. There's always hope, but now we're getting signs of real hope, and I think that's fantastic. Trading in nickel remains closed. Apparently a major Chinese producer is facing an $8 billion loss, and crude prices have also eased this morning on that news. The API did announce a 2.8 million barrel boost in crude inventories here in the U.S. last night. The EIA is expecting a small 657,000 draw in crude. We'll have to wait and see how that plays out. As far as opportunities today, we have group coaching. Let me get this up here. There's group coaching, and then a reminder for tomorrow. We have Make Hogue Money, and I think I put the wrong link in for the last couple of days. The second link here is for Make Hogue Money. So group coaching today at 1 o'clock. I always look forward to the opportunity to talk trading with traders. And the Make Hogue Money tomorrow. If you are not aware of what that is, right after the market forecast, we are going to adjourn into a Zoom webinar. We're going to look at the S&Ps. We're going to see if we find opportunities. We're going to talk about opportunities. You guys, some of you are going to be allowed to speak verbally and talk about your ideas, thoughts about the marketplace. We're going to vote on any trades that we take, and we're going to take those trades in sim. Last week was the first episode, if you will. We made about $150 on 2 trades. Off to a good start. I did pad the account a little bit later in the session, so we're up about $1,000 in that account. It's a 150K account. I'm kind of looking at it like this: if we reach the profit target in this, we're gonna take this and go from trading it on sim to trading it live, and you guys are going to be making me money, and that's gonna make me happy. All right. As always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel. You can get notifications when we do go live. As far as the VIX, the dollar index, and the yield on the 10-year, the VIX is down 7.5% this morning, down at 32.50, still above that 30 level. Dollar index down slightly at 98.42 after, I think, earlier this week or late last week putting in a new 52-week high. And the 10-year yield back up to 1.9%, perhaps on its way back to 2%. Next Wednesday is the release of the FOMC meeting. It's a two-day meeting, Tuesday and Wednesday. And I know a lot of traders are hedging. We've got a lot of rollovers right now. We've got currency rollovers going to be probably tomorrow. We'll watch the volume and talk about that tomorrow morning on the market forecast. We've got equities rollover. We've got nat gas rollover. We're facing a lot of rollovers in the next couple of weeks. So we'll keep everybody abreast on what's happening with those. And of course, we just have to remember that that does change our ability to see into the market through volume and open interest. Good morning to everybody. I see we've got a lot of folks here this morning. Drew, good morning. Sean, good morning. Charles, Denny, Dave, Scott saw, and he conquered. Theo, good morning. Andre, Jeff Martin, Brian, Zerain, good morning. Jay Crockett, Tachyon Amplifier, good morning. Jimmy Decker, Dan Trader, John Doherty, the Dancing Bears with us this morning. I always love to see that name there. Always good to see my friend John. Luis, Ronald, Marcelo, Alfred, Bill, good morning to you as well. Mirik, my brother Rick, love you. Always a pleasure to see you. Jerry is awake, and hopefully John is too. Aaron, Vince, good morning. Chilling with Dylan. Terry King, Three Lines Insight. Frederico J. Sarah Hall, good dawn morning to you, Sarah. Ricardo, Ngabo, Galen, Devant, J.S. Jewel, Expediter Dean, Michael H. Surin Juan, maybe a new name there for us. Rusty Golfer, good morning. Jeff Collins, Isaac, Mr. Presto, Mary, Ocean Blue, good morning. I'm still sleeping. And good day to you also, Aaron Umar, Trading Research. Good morning to Thomas and Robert S. Maybe a few names there that you've been coming. Thanks for saying hello if it's your first trip to the market forecast. Hopefully you're going to find it interesting and useful in your trading today. As always, we're going to be checking out our markets, the crude oil, mini S&P, Nasdaq, gold, euro, the 10-year, and the natural gas. All right, I think we've taken care of all of that business. I'm going to get my notes out here. We're going to start, as usual, with the daily in the S&Ps. Then we'll move to see the opening in crude oil, see if there's opportunity there. And do remember, the ability to adapt is vital for traders. Things are changing. They can change back in a heartbeat. There's still plenty of headline risks out there. Let's jump in and take a look at the charts and see what we're seeing this morning. All right. So we have some potential for some trap shorts down here after that move to the downside yesterday, late in the session. Very strange session yesterday. Weekly kickoff involved in it yesterday. We know that Monday we put in the low right at the weekly kickoff low. We did close below it yesterday. We did not spend a lot of time down below that weekly kickoff level, and we know that acceptance of price over time is acceptance of price. Did we accept price down below that? No. Did we bring in open interest on this move to the downside? Yes, we did. We added another 23,000 in open interest yesterday. Sure feels like we've got some shorts trapped in this market. And with this new information, we're looking at a potential change in the market. Sorry, my dog went a little bit crazy there. People walking by with the dogs, and she wants to be out there with them. So she's going to whine for a minute, and then she'll let it go. So in the last 3 sessions in the S&Ps, 1, 2, 3, we added 85,000 in open interest. You can assume that those are new shorts coming into the market looking for the market to continue to the downside. There is a change now in the marketplace. There is a ray of hope in Eastern Europe, and that could bring some potential major changes to us. Remember, the S&Ps are in rollover. They're scheduled to roll on Tuesday, the 15th. That's kind of an unusual day for it to be scheduled, but we'll have to remember to beware the Ides of March. Still lots of headline risks. The market is in an inside extended trading hour range from yesterday. We find that a little bit interesting. Here's the situation on the 30-minute chart. We have settlement down here at 41.6875. Put that on your charts. The market opened last night right about here. We've got all overnight longs in this market. So those overnight longs, by looking at the volume, we can understand that those are shorter time frame, weaker hands traders. These are not the big, strong, powerful, wealthy traders. These are the pea shooters that trade overnight, and they've been consistently moving price higher. So we can make that assumption that we've got some very short time frame overnight longs, perhaps against some longer time frame shorts that may be a little bit stuck in the hole here. So we've got a situation where we're going to be opening above a value inside range. Our extended trading hour range is inside the extended trading hour range from yesterday. Looking at where we've been as far as the weekly kickoff low here, which is 41.82. We looked at it the night before last, we rejected. We looked at it yesterday, we rejected, and then came back and then closed down below that level. Lots of gyration and jockeying for position yesterday. It looked like, this rally off the low looked like we got too short. And then this break off the high looks like we got too long. Short time frame information overall, I think, was important in yesterday's trade. We traded to the previous day's value high. We opened, we traded back into value. We completed the value areas special situation play, and the market turned around and then closed on its patoot. We have new information now. There's always the possibility that this market can come back towards settlement, back towards weekly kickoff low in an inventory adjustment from the short time frame longs. What these short time frame longs are looking for when the U.S. market opens, it's the opportunity for them to continue to benefit from longs if the long time frame traders can come in and continue buying after the regular trading hour open. If we are indeed stuck short, if nothing changes with the hope that they're going to be coming to some sort of an agreement in the Eastern Europe, then that is a distinct possibility. We do have to remember we're coming into rollover, and rollover is going to be more of a lean towards range-bound trade than directional trade. Where are we at? Well, we had our range-bound trade here. We rejected it on Monday. We continued it on Tuesday, adding open interest all the while. If we're too short in the hole here, a move back towards this area of balance might be beneficial for our longer time frame traders to be able to achieve a cheap rollover. But who knows if the rest of the world is going to allow them to do that. So this morning, So this morning, we're opening out of value and in range. The opening range trade in the S&Ps has been a disaster lately. I'm not even thinking about doing that. I'm going to let this market open up and see what kind of opportunity we get throughout the day. I wish I could say exactly what is going to happen, but nobody can do that. So we have to trade what we see. We're thinking we're a little bit too short in the longer time frame. If we get the opportunity to buy weakness here with no change or even a better change as to what's going on overseas, that would be an opportunity for us to begin to buy breaks. If we are oversold, we want to buy breaks. Brother Rick is saying S&Ps are opening into resistance. Rick, I'm wondering if you're thinking about this trend line that seems to have several points of contact up here and kind of up against that on the opening. All right, here we go. Let's get into the crude oil. So we've got our first uptick in open interest yesterday. We added 1,400. This is the first uptick we've had in 5 sessions. In the last 5 sessions, we've lost 10% of the total open interest. That's almost 200,000 contracts. We're 8 days to roll over. Seems like that's a long ways away. There's a crack now in the fear and emotion that has been driving this market higher against what we're looking at as a feeble upside auction because of the lack of open interest increases. We've been losing open interest on this move to the upside. It's not a very confident move. We've got an inside day on an inside day. Inside extended trading hour range yesterday, inside extended trading hour range today, or maybe not. That may have just recently changed. No, you do not have to be flat for JOLTS jobs in step 2 or even in a funded account. That's not one of the ones that we're looking at. Okay, so here's the 30-minute chart. We've got some overnight shorts in this market. The inventory is short. Back below weekly kickoff high, 122. What is that weekly kickoff high? 122.40. Settlements up here. We're going to put that on your chart because that can be a target if we do unravel our overnight inventory. But we've opened now with a gap. Gap rules, balance rules. Here's back to the daily. 1, 2, 3. We're starting to set a little bit of a balance up here. If we can't hold last week's high, then maybe indicative of a continuation move to the downside. We've opened with a gap. Here's last week's high, weekly kickoff high here. A couple of important targets for us. What did the opening range look like? Ooh, another biggie. 66 ticks. We took a look above it. We did not find what we're looking for. I find that to be important information. We know we're holding overnight shorts. This push above the opening range did not bring buyers. So back to the 30. Okay, we did not bring buyers when we looked above the opening range. Doesn't mean it can't go that way, but that should be maybe enough to incite some of our overnight shorts to get out of those shorts. It didn't. It didn't. This may be emboldening sellers. We continue down through last week's high. That might be a very interesting situation. We've got naked point of control down here. Let's call that 112.75, which is really close to one of those previous swing highs from 10 years ago. We got another naked point of control right here. 110, approximately exactly. Here we are. We're testing last week's high. That one little look above the opening range was a little bit of a warning sign not to try and get long here. Our overnight inventory stuck with those shorts and seemed to be continuing to get paid now. We watched that high of the regular trading hour session may offer an opportunity in the opposite direction. But right now, if I'm short, I'm relatively comfortable. We got to get through this last week's high. Let's move on to the Nasdaq now and see what we're seeing there. Okay. So here's the Nasdaq. Less potential for trap shorts. We lost open interest yesterday at 1,300. We got weekly kickoff low. We've had two closes down below it. This market has been presenting weaker than the S&Ps. It's much deeper in the red. So that may mean that there is perhaps a greater opportunity for us to be stuck short in the hole down here. Hope is in the wind. Let's hope that hope comes to fruition. We're rolling again on the Ides of March, 3/15 on a Tuesday. Kind of unusual. We'll be keeping a close eye on that. Take a look at the 30-minute chart. Similar to the S&Ps, settlement is down here, 13,267. Put that on your charts. Holding now back above the weekly kickoff high here, low, I should say, 41.82, 13,483, 13. Yeah, this is the weekly kickoff low. Got to make sure I know where I'm at here. We had 2 days closing below it. We spent a lot of time down here. If this market reaccepts above this level, this could be a very powerful change that we're going to have to adapt to. Yes, opium is illegal contraband in trading. I'm hoping more for peace is my hope. All right, where was I here? Overnight longs. Back above an important inflection level. The market is showing signs of being supported by that level. Last week's low, weekly kickoff low, really, really kind of close. Well, actually, this is a previous point of control that I should have taken off of here. You know what? We're going to just do this. Last week's low is here. So now the fact that we're back up above here, we're going to open up here. If we bring in buyers, if we're short in the hole here in medium or longer time frame, our short time frame longs from overnight are sure going to get paid. Yes, beware the Ides of March. I see you guys have these great ideas about standard deviation. Opening range will be super important. Wild swings will probably till FOMC. I don't think the CL chart was delayed. We were a little late getting to it. Sorry about that, Rudella. But all these ideas that you guys are coming in with, Syed, 42.38, 42.67 appears to be a huge supply zone. Buyers will need work extra hard to close above that 42.67. Bring these ideas, bring these thoughts tomorrow to make Hogue money. These are the thoughts we want to be talking about, thinking about, voting on, and taking trades on. So make sure you guys come tomorrow and get your 2 cents in, get your votes in, and let's see if we can't make Hogue money. I love the idea of everybody talking about the things that they're looking at. There's so much we can all learn from this. All right, so Nasdaq, looks like we're putting in a new overnight high as we speak. We've got a while before the open. Would you like it if we were to open with a gap and not be able to close the gap? I think that would be more than enough to squeeze a few shorts out of this market. A lot of it depends on the headline news. Don't forget to keep your ears and eyes open and be able to adapt to the new situation. Speaking of new situations, gold, we've had open interest increasing overall since about the 11th of March. Every red day was the only days that we had losses in open interest. So we've been increasing open interest all the way up to the high here. Yesterday was our first hint that the upside auction may be tiring. Even before what happened today, we lost 5,100 estimated open interest on this push to the upside. We lost open interest. So blow off top, shorts finally getting squeezed out, perhaps some profit taking from longs because we came off that high pretty good yesterday. Now here we are pushing lower. Before, this morning we were inside extended trading hour range. We were holding above weekly kickoff high. Weekly kickoff high now penetrated back to the downside. Here's the 30-minute chart. Okay, so here's our push to the high. We pushed back pretty hard. Some long liquidation coming in there. Is that why we lost some of that open interest? Not a lot. No money came into the long side yesterday. Settlement was right here, 2043.30. We've got some overnight shorts in this market. Initially, the opening range, I think, looked to the upside. When it did not close that gap and came back into the opening range, I was like, okay, when I kind of want to look for opportunities to be short. We're now below weekly kickoff low. We've got a naked point of control that we have just traded to, so we'll take the ray off of that because now this has been rechecked. We got last week's low here, I believe this was. No, last week's high. We can't hold last week's high. There's plenty of visuals down below for us to be looking for. We've got naked points of control, a go-go. We've got past weekly kickoff levels. There's lots of things for us to look at down there. Is this a 100% turnaround for the gold market? Well, we could possibly be putting in a island top. We haven't closed the gap here, which means we're going to be coming up to a high, leaving a range gapped to it, gapped from it. An island top can be a powerful reversal signal. So now we've got lots of nuances that are saying there is a change in gold for at least for the day trader. We'd better be paying attention to it. If you're a longer term investor in gold, you may still be okay. There's still a lot of uncertainties out in the world, including in our own economy. Take a look at the euro. So here we are. Dollar turned around, came off the 52-week high. We've got one close below weekly kickoff low. Open interest indicates short covering yesterday on a push back above the weekly kickoff low, which by the way is 108.74. We got a pretty big push to the upside coming at us today. Look at how short this market potentially is. It's been one time framing lower for 3 weeks. Yesterday, we lost 4,000 in open interest. Some short covering, you think? You think we're still short and whole a little bit down here? Look at the action we've got here. Changes in the wind. This market rolls potentially tomorrow. We'll be watching the volume, and we'll see if we change to the June contract tomorrow or Friday. But tomorrow is the day that's on the schedule, so we're going to take a look at the volume tomorrow morning. Still trading March today. It's going to be a bear of a rollover for those that are holding huge positions in the euro. It's going to be a tough one. Settlements all the way down here, 0907.5 ticks. We've got lots of overnight longs that are continuing to get paid. I'm not going to step in front of this. We know we've got some visuals above here, namely the first one, this naked point of control here. It was pretty relatively organized on those 3 days, but we've got more information up here. We've got a weekly kickoff high. We've got more visual targets above. And I want to step in front of this. If I'm not in it, I may just have to sit back and watch it happen. I'm not the best at getting into trades that are already underway. Now, that said, whenever I say that kind of thing, like I don't want to fight this, I don't want to jump in front of it, I have a tendency to put in the high. We'll check that out on the recap today and see if that is what happened. To the 10-year and the nat gas. The 10-year rates, climbing again. We've been in an area of balance. We fade those extremes until there's a breakout with some substance. We should be looking for opportunities to sell strength against weekly kickoff high here. We've broken out of range. We seem to be spending some time and volume down here. The market's opened. It seems to be continuing to respect The sellers here. Here's the 30-minute chart. This is the 30-minute chart here. Settlements up here. 127.05. Gap to the downside. Gap not filled. We go with the direction of the gap. We couldn't push this market considerably lower now because, again, we've broken out of range. We've broken out and show acceptance below weekly kickoff low. I'm looking for opportunities to sell strength in this market. And that may include a move all the way back up to weekly kickoff low. Would that be too much to ask? Just to get that opportunity to limit the risk in that. And for the nat gas, we lost 7,900 in open interest yesterday on pretty high volume coming off our recent high. Trapped longs. This is what it tells me. A lot of trapped longs bailed in this yesterday. If we still have trapped longs, I could see this market coming back to the low end of this area of balance, weekly kickoff low. Would be a wonderful test. I think it would be a great area for us to throw a line in and see if we can find some fish there, because we're probably not going to have to risk much to find out we're wrong. Here's the 30-minute chart. Settlement. 452.7. No real overnight inventory here. We opened with a gap. We've closed the gap. We are running out of energy to the downside here. We opened outside value and range. The value area special situation could be something that would be interesting for us today. Acceptance inside value from yesterday would indicate a higher probability of a rotation of price back to the high of value from yesterday at some point in today's session. We're not there yet, and acceptance of value is highly subjective. But it's a possibility. It's a possibility. If we can't maintain price inside yesterday's range, I would look for this market to rotate it back down to weekly kickoff low. Just some ideas. All right. Let's see what we've got here. Dan says, aid to Zelensky says Ukraine ready for diplomatic solution. I think they were ready from the beginning. Ukraine aid says can discuss neutrality, need security guarantee. Dan caught a nice short on the breakdown over new highs. Rick, markets oversold, overbought. Corrections. I think you're probably thinking about gold. It's entirely possible that blow off to the upside on lower open interest can be a potential pullback for it. Now, we were talking yesterday about not expecting a huge pullback in gold, but now the whole situation has changed. The world landscape now looks a little bit different if we're going to get our prayers answered and get this war over with and get people's lives back together. That would be a good thing. CL, gold, nat gas all spiked lower in the last 15 minutes. That could be because of the news that's coming out from Ukraine. Yeah. And Diedrich, nice to see you. Nice to meet you. I don't think I've seen your name before. Glad you're here at the Market Forecast. And we've got group coaching today at 1 o'clock. We look forward to seeing anybody and everybody that wants to come. We'll try and get to all questions. Sometimes I don't quite get there, but we'll do our best. And make Hogue money tomorrow. Get into the group. discuss, vote, trade, and will make me money. I always like that. And I don't get to take any responsibility for it because it's all your decision. Time for that deep breath, Tachyon. Stay humble, grateful, creative, and adaptive in your trading today. Things are changing. We have to be willing to make those changes as well. Keep praying, ladies and gentlemen, for peace, strength, and freedom. Be good to yourself. I'll see you for the group coaching at 1 o'clock. If not, I'll see you for the recap at 3. Get out there and profit today. Trade well and keep praying. We'll see you later.